Top three things in my notebook this morning. Number one, China. Number two, Europe. And number three, the industrial stocks. So first on China. China had a great session overnight, up 1.4% to fresh year-to-date highs, up 10.4% now for the year-to-date, with the kind of economic data in China that I guess people are looking for, not too hot, not too cold, which is just good enough for us. We just need to get the market right. Obviously, FXI is the way that we're playing this. So again, China up 1.4%, remains one of our top two favorite markets in the world from an equity market perspective. And no, those markets are not American or European. They are, of course, Chinese and Indian. And we like it. India up to 29.7% year-to-date, up again, new highs last night. Second point would be Europe, which we do not like. You're seeing, again, another test of the trend lines across the board from the DAX to the CAC. And back again, I put these levels in your look note in terms of the trend lines. The DAX line, again, friendly reminder, the trend line is 96.42. We've tested that and failed again into what will be a very hopeful week with people looking and begging and asking for quantitative easing. Now, again, I ask, is there any thesis drift in that? We used to be long of and bullish of European equities, but we were bullish of growth accelerating. Now, if you're bullish on Europe, I guess you're bullish on money printing? Not the way that we kind of roll, but again, that is what it is. So in the face of European growth data slowing, which you got again yesterday, it was a day off for us, but the European data was decisively slowing and negative. Then finally, the industrials. If you look at the complexion of last week's no-volume U.S. stock market move to all-time highs in the S&P 500, if you break it down one level into the sector studies, industrials were down on the week, and utilities were up a full 2% on the week. So what does that tell you? As everyone takes down their GDP growth estimates, what you're seeing is a resurgence of bonds, resurgence of anything that looks like a bond. Utilities up 14% for the year-to-date. REITs up over 18% for the year-to-date. So we reiterate our growth slowing thesis. And again, there's a lot of ways to play that, not the least of which are long of the TLT. And those are your top three things.